It's official today, January 8th, 2024. Nike and Tiger Woods have parted ways. Basically, Tiger Woods is now a free agent. Now, he obviously isn't the athlete that he was almost 30 years ago when he originally signed with Nike, but still a very influential player in the sports landscape and in golf. So now there's a bunch of speculation on where he's going to end up. And one that really caught my eye today was On Holding. The stock was up nearly 10% in early trading. Right now, as I'm recording, it's up about 6%. And the theory here was that Tiger Woods could actually invest in the company or get a big equity position via something like stock options. We have seen athletes and celebrities do this before. Could really explode the company's visibility in the market. So in some ways it makes a lot of sense, but if you dig a little bit deeper and think about On as a brand, I don't think it makes sense for this company specifically. But today I want to cover what Tiger Woods could bring to some brand somewhere around the world and why On Holding specifically probably isn't a good fit for Tiger Woods. And it's pretty clear once you start digging into the company's sponsorship strategies and where it has put its money in the past. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Go to fool.com/ASYM for their top 10 stocks to buy right now. I'm just going to start with the announcement. This was from ESPN reporting that Nike and Tiger Woods have ended their 27-year partnership. Nike even tweeted about this, saying it was a hell of a round, Tiger. So it's clear that both parties have really seen this coming for a little while now. But the reaction in the market, and this is the company that I'm focused on here today, is On Holding. And I think what's interesting here is this is absolutely the growth company in the shoe segment, in sports leisure, however you want to kind of look at the company, growing much more quickly than Nike. So there might be more upside from an equity perspective. But if you start thinking about On as a business and what they actually make, who they sponsor, it makes less and less sense. So I'm actually going to start with their sponsorship deals. And these are the athletes that they highlight on their website that they sponsor. There's primarily runners here, although they are also starting to get into the tennis business. If you're familiar with the Federer shoe, the Roger Federer shoe that they make, Federer was actually an investor in On before they came public via IPO. So he has been involved in the company for a little while. That's sort of the next market after running that On has gone into. But there's something that really stuck out to me as I originally started researching On Holdings, and that is that they were really leaning into the top female athletes in the world. They were not the kind of company that was going to write a huge check to sponsor the biggest male athletes in the world. They said, we want to show that we are the best brand for runners and do that at a little bit of a more affordable level. The one that is, I think, probably the most notable right now is Helen Obiri, who actually won the Boston Marathon recently using On shoes. Now, they've expanded this lineup to include both female and male athletes, but I would argue that the female athletes are actually more famous in their specific sports than the male athletes that they sponsor, especially the tennis segment. These are kind of no-name tennis players, nowhere near the name of a Federer or a Tiger Woods. So from that perspective, this doesn't really make a lot of sense. From a product standpoint, it makes even less sense. So I'm just going to focus on men's shoes here. Running shoes is really what On is known for. So road running shoes. The Cloud series of shoes, this is really what they started with as a company. And then you can go to lifestyle shoes. It's more of a casual type shoe, hiking shoes, trail running shoes, and tennis shoes. And here's the Roger shoe that I was talking about earlier. So really what you're seeing with On is that they have two sports segments that they're focused on. Running in a variety of places, whether that's on trail or on road, and then casual or more of a fashion product. That's what they're focused on. They are not in the golf business. They're not in basketball. There's a lot of areas that particularly Nike is very big that On Holdings just doesn't participate in right now. So from that perspective, I don't think it makes a lot of sense for On and Tiger Woods specifically to do any kind of deal unless there's going to be some sort of massive investment in the golf business. And we know that Tiger Woods has actually been wearing FootJoy shoes recently because the Nike shoes that he had just didn't work with his surgically repaired leg. So there's a lot of reasons here that On maybe wouldn't be a good partner from a product standpoint. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So this doesn't mean that On Holding couldn't make some sort of deal with Tiger Woods. Maybe it's possible that he gets shoes from a company like FootJoy And then apparel comes from a company like On Holding. That could be a huge value add for both parties, bringing exposure to On in an area that it doesn't have quite the same revenue as it does in the shoe market. But I do think there are probably more natural partners, companies that just simply have bigger exposure, more distribution, and can make a shoe and clothing products that are going to be built specifically for golf and exactly what Tiger Woods is doing and is accustomed to doing. From the incentive side, this is where I think there is a little bit of intrigue. And if you're Tiger Woods, you at least take a meeting with somebody like On Holding. And this is a company that's much, much smaller than Nike. Nike has a $157 billion market cap. On Holdings market cap is about $9 billion right now. So if you see upside of 5x, 10x in a company like On Holdings, well, maybe you take that equity bet in a company as opposed to just taking the cash from a company like Nike. And it appears that Nike isn't going to be betting on Tiger Woods in the same way that they bet on Michael Jordan, building a massive, massive brand around him. So maybe he can do that with a company like On. That would be maybe the upside, and it could play well for both parties. But given On Holdings' position as primarily a running company and moving a little bit into tennis and moving a little bit into apparel and accessories, I don't think that fits well with Tiger Woods' sport and the products that he's always sold. And then if you look at their sponsorship history, this just doesn't line up at all with what On Holding has done historically. Historically, it's gone after very, very high-end athletes, but in a little bit lower price point in the market. So not quite as much exposure, but showing that you can be the absolute best runners in the world if you use on products without having to pay the absolute top dollar for athletes in the market. That's not really where Tiger Woods has ever been throughout his career. So if they did make some sort of deal, it would be a massive shift for both parties. On also doesn't have nearly the marketing budget that a company like Nike has. Now, if Tiger Woods was the kind of person who brought a big audience by himself, by being an influencer on Instagram or TikTok, any of the social media platforms, that's something that could potentially be intriguing for both parties. And saying, hey, you don't have to pay me cash because I'm actually going to deliver sales. But without those commercials, without being on TV, and Tiger Woods has not been playing in the leaderboard in a lot of the tournaments in recent years, Tiger isn't bringing the same exposure for very little financial investment the way that he did with Nike early on. So that's the other thing that he's really not bringing to the table that could benefit a company like On Holding. From so many angles, this just doesn't make a lot of sense. I thought the jump in the stock, 6% still as I'm recording, is pretty notable, but don't be surprised if it pulls back over the next few weeks because On and Tiger maybe don't make sense together long term. But love to hear your thoughts about this in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.